Hey there, team. Very good evening to you all. Hope you're doing well this Sunday. The internet, first and foremost. I don't think it's going to allow for me to do a live call, to be quite honest. So what I've figured to do is let me break down the pairs individually, and we'll start with the DXY, and then I'll be able to post little bite-sized clips to us all, or for you guys in the chat, and then we can go from there. Tomorrow, a heads up, I'm traveling home in the latter stage of the afternoon. So in the morning, I'll be present slightly, but upcoming once I'm home, then we start the ball rolling again. So I hope you're well. As I said, last week was pretty good for a nice training week. Welcome back, Boris. And touching on that topic, why not take a break from trading? It's something that I was very reluctant to do myself, but certainly when I indulged in a bit of joy outside of trading, then it made coming back to trading, I wouldn't say easier, but a nice refresher of the mind without some charts into the depth that we're certainly used to pretty much on a daily basis was really nice to do. So I'll definitely encourage it for us all. And that is a nice reminder that trading, although, yes, day traders, it does suggest in the title, we are to trade on a daily basis, but it's down to our own interpretation, right, of what a day trader really means, and it needs to suit us. And it needs to suit our lifestyle. For example, I'm away again, and I haven't stressed too much about the chart, but I certainly have made sure I have given it the time that it deserves if I am going to be a day trader away from sort of my standard setup. So it still deserves the attention that you would imagine trading deserves, but it's on our own time frame. So nevertheless, you know me, a bit of a rant always, but that's a good rant nevertheless. So if you are umming and ahhing, if you do need a break, if you're feeling a little bit overwhelmed, overloaded, I wouldn't even say overwhelmed, it's more overloaded. I'll put my hands up to that. It's been it feels like a really long I'll say the first 2 quarters of the year it just felt endless, really. Every day getting to the charts, feeling like you couldn't really trust what the charts were saying. A tweet would come out or blow your analysis out of water. You're now having to reanalyze. The chart then dumps again, and you're just thinking, I'm always 2 steps behind price action. But certainly in stage of in terms of quarter 3, it definitely feels a lot more logical about what's going on, particularly with the DXY. So that's where we'll start. When the DXY isn't, I should say, reacting to, let's say, those in power playing battleships or battle rockets, opening and closing, very important. Straits, for good example, the charts don't seem to really be reacting as they would or as they did when that kind of news started to come out, let's say a couple of months ago. We're not really seeing that, in my opinion, and I'm able to really focus and trust my analysis a lot more. And that's a really good thing that you guys can hear, that although I am not only a funded trader, I'm funded with outsider capital as well as my own, I too have those same feelings. So if you're feeling the same, just rest assured that you're not feeling anything else that isn't normal. So you can take it from me, I still feel all of those feelings where I wake up, come to the charts, and just feel like, goodness, I'm not really sure how I can trust this at the moment. And that's hence why I took some time off the charts eventually, and it was probably a really good decision. Although I still took my iPad, as you guys knew, I wasn't really trading. I just sent some analysis out here and there, took a couple of trades here and there, but nothing in depth. And I really did enjoy my holiday. So anyway, the DXY, what do we have? Let's start with the weekly time frame. You see I've got the 15 up as well, just to add a little bit of context, and I'll do some illustrations about what we can expect in terms of price action. I'll go through those aggressive types of positions as well with the illustrations. But weekly time frame, so we'll start from top-down analysis as we always do. Higher time frame, I'm not really too fussed with it, to be quite honest. You'll probably hear me say that over and over again, but when you can see how obvious how obvious it is in terms of the candlesticks printing that formation, you can't really ignore it. So we had a high, higher low, potentially higher high confirmed, which confirmed that higher low. We had a weekly order block, price came back down into that weekly order block, and look what's happened. We've made a higher high. So price trends on every time frame, even the weekly down to the 1 second time frame. Take my word for it. So, of course, now, and it's the same thing as pretty much what I've been saying all week, after that higher high, what can we expect? A potential higher low. And where could that higher low be? There are two places on this chart where I do believe a higher low could well take place, followed by that higher high continuation. At this point in time, I'm still focusing on this area. Why? Well, that's where that weekly 50 MA is. Also, that's where the daily 50 MA, and what it's nice to see on the bottom right hand chart is that daily 50 MA hasn't been retested. So I do still believe there is room to the downside on that DXY, which will mean immediate potential DXY weakness coming into the charts tomorrow. So with that said, what I'm looking to then do is go and have a look at the performance, if I can get my words out, performance of that daily 50 MA, and try to understand why I believe in and around this area could well be a hold up or slightly refined within that area down at this weekly 50 MA. So the daily supporting it, we've got the weekly also supporting it. So this could be a daily candle. You start to push down through that daily 50 MA. And then we have, of course, the close of business of this daily candle, even with the rejection of the weekly. However, of course, that candle is going to take 5 working business days for that to close. But certainly for the day, the expectation is going to be that this candle, when it does print bearish or is in the process of printing bearish, our confluence will suggest that we're going to expect a rejection of that daily 50 MA, and then that would be the lower time frame printing bearish, followed by printing bullish, and then potentially we could be on our way to then seeing that higher high being created. So with that said, we've got a daily order block in and around that area, and again, potentially 2 areas on the chart where price may want to gravitate towards. These are just our illustrations on the chart based on our strategy, but we're well prepared in case our strategy isn't respected in the immediacy. Then we're looking for other areas potentially for the DXY to reject. Down at this low on the daily time frame bottom right hand chart, that is simply the weekly order block refined down onto the daily. So you can see here, and what I'll do, I'll also put this weekly order block as well, so you can see exactly what we're looking to refine. So this first area is going to be my highest probable point of interest for a reaction in the long direction on the DXY. And of course, we don't just trade from daily or weekly order blocks, we want to start refining those areas down as well. So the first point of interest will be this daily order block refined within the weekly, and then it's the only 4-hour order block available within that extension, of which I would suggest, or I would say, after this high created, we've had that higher low followed by a higher high, which of course confirms this area as the higher low. Is there a 4-hour order block in that area? Yes, there is. Let me just double check I haven't made that up, and it is correctly drawn on the chart. And as well as that, it is, I would say, just about still available. With that said, even if it isn't available, refined within this area will of course be a lower time frame 15-minute order block, that if price is so close here, then most certainly to the right hand side, the 15-minute order block refined within this 4-hour time frame is definitely not mitigated. So after that higher high, we're expecting a higher low, and then we are simply just trending back down into that area, beautifully into a downtrend, into that higher low area on the higher time frame, where we're going to expect price to kick on towards the upside from. So I think DXY makes sense. I hope the way I break it down, you can see that it makes sense. And of course, on the way down, we are trending in a nice direction. So we'll have a look at the downtrend and understand what are the areas in which the DXY could potentially react from towards the downside. So first and foremost, we're going to do exactly the same in the inverse, to support why DXY weakness may come out of the charts. We already recognize where DXY strength could potentially come from the charts, and then of course that's going to help us with our crosspair bias in terms of when are we ready to execute a position in either or direction. So 4-hour time frame. We can even start with the daily, to be honest. In terms of the weekly, there isn't an order block to this side to give us the support towards the downside. And to be honest, I like that because there is no conflict in terms of we must short now. What that is suggesting is let's wait for our confirmation to short, which we already have, in my opinion. Daily order block. As a result of this daily engulfing candle, bottom right hand chart, that's the daily time frame. Let me make that big for you guys to have a good look at. This is the candle here, bearish engulfing, took out a couple of days worth of price action, left us with a nice daily order block that created it. It is the only daily order block that was available at the time, and as you can see, price is respecting that daily order block to perfection. That's what we would expect to see. And then the same applies. Can we look to refine this daily order block down into the 4-hour and then subsequently down onto the 15-minute time frame for us to come up with a good conclusion why that would be a nice point of interest? What's better to see is prices developed somewhat from that area. So we'll go to the 4-hour time frame. Of course, higher time frame, we recognize higher high, higher low, higher high. So that's one thought process. Nevertheless, immediacy, as our title suggests, day trader, we recognize the performance of that 4-hour 50 MA. We can see how it does work. Oops, that's my mother, just a moment. She'll have to wait while I'm on a roll. So we are respecting that 4-hour 50 MA to the upside. We've had that break below. This is our first clue, potential low in the market. Looking for that lower high followed by maybe a lower low. It hasn't really been confirmed at that point, in my opinion. We could stretch, and certainly that's why I've got a circle around it, because it technically these candles have closed below these candles. Therefore, here is an area in the market where we'd expect a reaction from. However, what's happened since then, price came back up to those highs, which give me the indication that potentially we're just in a range. And then we start to stretch price across, and in fact, we get that low created. After that low, what would we then be expecting? Low, lower high. It's down for us to try and anticipate where that low came from. Price action did a good job for us because what we had was this another. If you have a look what we saw in the daily time frame, exactly the same here on the 4-hour. Bearish engulfing that took out price action to the left hand side. It left us with a 4-hour order block available, and then what we can see is not to perfection, in fact. My thought process is that price actually came right back into it. However, it didn't, so that could potentially be a point of interest for next week as well. However, in the immediacy, look how price has developed from that. We've had a low created, potential lower high, 4-hour order block, which created the most recent low, perhaps supported short by that 4-hour 50 MA. So it looks good at the moment. Now, when we refine this area down on the chart, I think it's already done, to be honest. Yeah, we're here. We've got a couple of nice points of interest. And for that then said, it's down to us to understand, well, what's going on in the 15-minute time frame. Can we 100% say that this low has come from this order block? It's difficult to say, right? In fact, I would say otherwise. For me, this leg extension has in fact come somewhat higher. Therefore, for me, when price opens on Monday, I'm not going to be too aggressive with my anticipation of expecting DXY weakness coming out of the chart. I believe price could well react to these highs. Price could react to wherever it likes, but based on the technical smart money concepts and our refined areas, and based also on structures on that 15-minute, we can see price is stepping down. So there's no reason why price would not want to gravitate back up towards these highs. However, what I would be inclined to view is these order blocks. So this area was an order block in the market on the 15-minute time frame. Price came into it. We did have the reaction from it, but what did the reaction do? What the reaction didn't do was break most recent lows. So in terms of the immediacy of price action stepping up, we're high, higher low, higher high. So here remains a key point of interest, i.e. structure point towards the upside. So what I'll be inclined to do is await price to break that structure point, allowing me then to have the support on my 15-minute time frame as well as my 4-hour, and then I'll be happy to use DXY weakness coming out of this area. Until we've broken that, what we must remember is any shorts on the DXY would be aggressive, and we can expect price to want to pull up slightly higher to this 15-minute order block that, in my opinion, absolutely caused the most recent low in the market, as you can see. So I hope that breakdown is a good one to start off with, team. Just going over the basic concepts and what I'm going to be expecting for come tomorrow. With that said, anything can happen overnight in the crossover when market opens. That's usually why I don't go too in depth on the 15-minute time frame, but I think it's a good place to start based on how we can look to refine our points of interest down, and also with the understanding that despite what we know on the higher time frames, it doesn't mean we still cannot use the DXY in terms of what's going on now. That's the advantage of being a great trader, not just a good trader. We understand when we need to exit potential shorts based on the higher time frame point of interest. And that's why more often than not, when I am trading, let's say, even in this scenario, if this was any other pair and price, as you can see, looks really, really good or even great on the 4 and also on the 15, as we start to gravitate deeper into these weekly order blocks where I'm actually expecting price to move towards the upside, that's where it's a fundamental part of even some of my rules with a couple of investors that are traders who allow me to manage their funds, that when price is in a weekly order block, I am not actually able to take a position in the opposing direction because it goes against the fundamentals, right? Because it just goes against everything that we already know should be happening. So why are we risking money doing the opposite? So therefore, it's a great indication of when it is a good time or even a great time to exit a trade. If this price action was already taking place deep within this this higher time frame weekly order block, with the expectation of price to move towards the highs, I wouldn't be going over shorts. I would just say, well, we need to wait for these highs to be taken out, price then pull back, and we go with the longs with the overall directional bias. So team, that's me rabbiting on, but I hope it helps. It certainly helps me, and that's also why having a break from time to time is really good, because you can just get complete clarity on exactly what you need to be doing as a trader. And I invite you guys to do your whatever charts that you are trading. Try go with that degree of professionalism. It's one thing to be great at chart analysis, and I think that's a great place to start. Forget about all the trader elements that will make you a great overall trader. Understanding your charts and what the candlesticks are telling you is only going to help you really understand anyway. Therefore, your trader elements are not going to be tested. When I get to the chart and I can see a chart with that degree of clarity, is very easy. So that's already done. What I have to do now is manage my emotions, manage my account balance, or rather what I'm risking, and manage the trade. I don't need to think about anything else. This becomes second nature. So really give it a go, and really focus on what's going on all time frames, when you're going to be looking to exit a trade, when looks good based on structure that you expect price to react from. And then when it happens, it's almost a nice pat on the back to say, you know what, I really do know what I'm doing, and I only need to focus on a couple more things now to bridge that gap between good and great. So yeah, that's the start on the DXY. So I hope that helps, team, and I'll post this privately, of course, on YouTube, and I'll also post it privately on TradingView for you guys to view, and I'll send it in the group. Have a very good afternoon. I'll do not to that degree of depth on all the other pairs, but I'll most certainly go through some of my favorites going into the week. Take care, team. Hope you're doing well. All the best. Speak soon. Charles.